Hello traders, welcome to the technical update for Thursday the 29th of January 2015. I hope you've all reviewed the economic calendar. As I explained in there, we've had some volatile markets and there's been some great trading opportunities overnight. But let's look to what we can get out of today's session. We're just leading into the European session and I'm on the daily chart of the New Zealand versus the USD, and as you can see, last night we had quite significant falls. And that was all justified due to the policy change of a more neutral stance from the RBNZ. And I think that momentum is going to continue. If we go to a shorter time frame, there's going to be some trading opportunities there. Once the market has broken through the 73 level and continues on, I believe that you will get a shorting opportunity. As soon as we get a breakthrough, I think if you were to short the market and chase 10 pips, you'll easily get it. And you won't have to experience too much exposure in terms of potential risk. And when I say potential risk, just in case the market does have a bit of a bounce before it does curl over, you just want to get a quick run. I wouldn't try and chase it just yet, but we'll have a look and see if there's any other trading opportunities. The Australian dollar, this is the daily chart, and as you can see, the market has fallen in recent weeks, and we've just had a bounce, and we tested the back of a historical support, and price rejected off it on the back of the Fed statement being quite bullish for the US dollar, and then also compounded by the neutral stance in New Zealand. People are now expecting that the RBA will take a similar stance, and the Australian dollar should continue to be sold off. This candle pattern definitely indicates that, and we could see the market into the 77 area in no time in the bottom end of this falling channel. As momentum picks up, it could even break through the channel, but for now we'll just trade down into those areas. The market is looking on a 1 hourly chart, or let's go to a 4 hourly chart. There we go, and it's just taking out the low. So I think that with this momentum, we are going to see a broader shift down, and this new low is going to continue to flow down into testing the 78 cent mark and then potentially beyond. I think we'll get a bounce off the 78 cent mark and before we actually continue lower, but we'll see how that progresses. There's you could potentially just trade the market pushing through this low and getting some pips in this region here. The Great British Pound, as I mentioned a few days ago, this is the daily chart. The market pushed back up into a sideways region, and we had a bit of a negative night last night. If we go into the day, into a 1 hourly chart, you'll see that the market came off on the back of the strong US dollar data. And if we start drawing some trend lines in here, we'll start to see that we're making lower highs, and we've taken out this low, which I posted a trade on last night and picked up some money. And then once again now, I think that if the market was to, let me put in a resistance level. Okay, anyway, we'll put a resistance level in here, and if the market was to break this, come up and break this support level here, I think we're going to make a run down into the 51 cent area, and I'll be taking pips and getting out at 51.100. The euro is also bearish due to the strength of the US dollar and also the divergence, as I was mentioning in the economic calendar. The divergence of the ECB is now easing policy, and then you've got the Fed, which is actually tightening policy compared. So this divergence is going to create a very weak euro against the US dollar, and I think that the trend's going to continue south, and I'm looking for bearish opportunities there. Once again, it's very similar to the Great British Pound, where the markets came off and were making some lower highs. And if I was to, I've obviously got my resistance level set. So therefore, I think that you could do a short-term swing trade here. If we get some resistance in this region and we start to fall away, that's a trade that I do like, and we'll be trading it down into $1.12 200 would sort of be where I'll be taking profit just before this next support area. But I do believe that we're going to get this area down here tested in the near term. The Canadian dollar was super strong. Like I mentioned that we had a bit of profit taking on the US dollar, and then all that was wiped out and some with this engulfing bull candle formation. It's a very strong formation, and with the oil falling by 4% after the Fed's decision and the strength in the US dollar, I think this is only going to continue to rise. And if you were to go, it's hard to catch this one, but if you were to trade it purely on fundamentals, you could get in now and then put your stop loss under here and adjust your equity management for such large risk. But I think that there's a few hundred pips in it in the coming weeks. It all depends on oil, and we'll be keeping an eye on that. Lastly, we'll have a quick look at the US JAP, and this is the daily chart. The consolidation still remains. The reason why if I go to a 4-hourly, the reason why the US JAP didn't rally significantly after the Fed's news is because everybody piled into bonds, and the US JAP is affected by the bond market in the US. So we had a move down into this lower region, and then of course buying came in once the US dollar buying is still a significant story, and I believe the support level is going to hold up, as I've mentioned yesterday, and we could move back up into this higher region as everybody jumps on the US dollar bandwagon. The US JAP won't be immune from it either. We do have some trading opportunities in the New Zealand JAP. Now this is a 15-minute chart, and the lows of yesterday, if broken, and the current lows now moving into the European session, if this double bottom is taken out and the market wants to move deeper into the lower area of 85 cents, there's some money to be made there, trading it down to test the 85 200 handle down in here. That's a trading opportunity I'm definitely looking at. And likewise with the Australian dollar, the low of yesterday, if that gets taken out and we move below 91 cents, move below 92 cents, it looks like it wants to move down into this area here, which is I'd be definitely getting out before we start testing historical lows. So there's the charts for today. I hope that's given you some insight. I'll be back again tomorrow, and keep an eye on Twitter for posting of live trading opportunities that I'm taking. Until tomorrow, trade well.